This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Secretary General Haytham Al-Ghais has urged OPEC Plus members to reject proposals for any text under negotiation at the COP28 climate summit that targeted fossil fuels rather than emissions, a letter dated Wednesday and seen by Reuters on Friday showed. The language used to describe the future of fossil fuels in a final agreement is the most contentious issue at the UN summit hosted this year by the United Arab Emirates. 3 sources confirmed the letter's authenticity to Reuters. OPEC said in a statement to Reuters it did not comment on official communication with member countries but that it continues to advise them and its partners.
The number of U.S. liquefied natural gas, LNG, vessels transits the Panama Canal to Asia halved in November compared with a year ago as Asia prices for the gas this week traded at their steepest premium to European prices in nearly 2 years. A severe drought has cut vessel traffic through the canal, increasing costs for shippers that take alternative routes or pay extra fees for auction slots in Panama. Further restrictions on canal transits likely will put more cargoes on lengthier routes, analysts said. The spread between the Japan-Korea market, JKM, a widely used Asian LNG benchmark, and the Title Transfer Facility, TTF, the European gas benchmark, was assessed by S&P at $2.79 per million British thermal units, MMBTU, on December 6, its widest since December 31, 2021.
Moving on to the top news in the energy sector.
The U.S. Department of Energy on Friday said it wants to buy up to 3 million barrels of crude oil for the Strategic Petroleum Reserve, SPR, for delivery in March 2024, as it takes advantage of lower prices to start to replenish the stockpile. The administration of President Joe Biden last year conducted the largest sale to date from the SPR of 180 million barrels to try to limit an oil price rally after Russia's war on Ukraine began in February 2022. The Energy Department in October said it would buy back oil for the reserve at $79 per barrel or lower, after it had received an average of about $95 a barrel from last year's emergency sales. It plans to release monthly offers to buy crude for the emergency stash through May next year.
Oil prices rose more than 2% on Friday after U.S. data supported expectations of demand growth, but both benchmarks fell for a 7th straight week, their longest streak of weekly declines in half a decade, on lingering oversupply concerns. Brent crude futures settled at $75.84 a barrel, up $1.79, or 2.4%, while U.S. West Texas Intermediate crude futures settled at $71.23, up $1.89, or 2.7%. For the week, both benchmarks lost 3.8% after hitting their lowest since late June on Thursday, a sign that many traders believe the market is oversupplied. Next, we have the top news in metal markets. The EU should go beyond banning aluminium wire, foil, tubes and pipes produced in Russia by sanctioning Russian aluminium metal for a greater impact, industry group European Aluminium said. European Union members are looking at a proposed 12th package of sanctions, including bans on aluminium wire, tubes and pipes, a small proportion of Russian aluminium imports. We regret the fact that the vast majority of Russian aluminium exports to the EU, more than 85% of the total, in particular primary metal, look set to remain outside of the scope of the measures, European Aluminium said in a letter sent to European Commission President Ursula von der Leyen.
Gold retreated back under $2,000 an ounce on Friday as the dollar and Treasury yields strengthened after traders trimmed bets for U.S. interest rate cuts to materialize by March following stronger than expected jobs data. Spot gold fell 1.4% to $2,000.49 per ounce by 2:15 p.m. Eastern Time, 19:15 GMT, after hitting a session low of $1,994.49 earlier. Prices were down 3.4% so far for their worst week in 10. U.S. job growth accelerated in November while the unemployment rate fell to 3.7%, signaling underlying labor market strength that made traders bet that it could take the Federal Reserve until May to deliver the first reduction in a series of interest rate cuts next year.
We will now look at the top news in the agricultural sector.
India's wheat inventories at state warehouses have dropped to 19 million metric tons, the lowest in 7 years, two government sources said on Friday, as 2 years of falling production forced state-run agencies to sell more grain to private players. Last year, India, the world's second biggest wheat producer, banned exports after output was curtailed due to a heat wave, and overseas sales picked up as Russia's invasion of Ukraine sent global prices to multi-year highs. While US wheat prices have corrected more than 35% so far in 2023, prices in India have leapt more than 20% in the past few months, despite the ban. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.